2015 tax provision. And the reason for me doing this is it's tax season, and since every one of us here will be filing our own personal tax returns, I will touch on some of the important provisions in 2015 and maybe help you gather around all those materials, deductions, related to deductions, help you minimize your taxes. Have all these materials ready before you even make an appointment to your tax professional. Top issues: renewal of expired tax credits and deductions, state and local taxes. It actually goes to your Schedule A. The higher of whatever you pay for, say you paid estimated taxes to the state is deductible in your personal tax return. The higher or actual sales tax paid, if you purchase something, say you bought a car, in the deed of sale you'll actually see how much you paid for the sales tax on that car. So whatever is higher, it goes to your Schedule A. Teachers deduction, it's back. Teachers could claim at least $250. If both husband and wife are educators, they could claim $500. College and graduate tuition fee, it could actually be reduced at least $4,000. Of course, there are limits and there are phase outs. Your tax professional can help that figure it out. Mortgage cancellation. A couple of things here. Normally, a taxpayer would receive Form 1099-C or mortgage cancellation. On the form, you will see if the taxpayer is personally personally liable. If they are not personally liable, there's no problem, no tax liability. But if they're personally liable, now there's an issue. You would actually need your tax professional to figure it out if the taxpayer, if you or anybody you know took out some equity of the house. There's a calculation, specific calculation, how much is taxable and how much is not taxable. If that's not properly reported in tax return, right away you get a notice from the IRS. Affordable Care Act. The famous Obamacare. There are actually informational reporting that the employer is required to submit to the IRS, and at the same time, the health insurance companies are required to submit to the IRS. It actually helps, as tax professionals, it helps us determine more if you have a coverage, and if you don't have a coverage, minimum health insurance coverage, there is a penalty for not having it. Say for instance, a taxpayer, we interviewed the taxpayer and they said, we made our own due diligence. Do you have a coverage? And the taxpayer says, yes. What insurance do you have? In short, the taxpayer lies to us. What happens is, because of this informational reporting that's reported to the IRS, your tax return is submitted. The IRS matches out if they run their system. They see if you do have a coverage, if you don't have a coverage. If you don't have a coverage, right away you receive a notice. Okay, and that's what it is. It kind of works like a 1099-C. If you work somebody else to somebody else, that somebody else reported a 1099-C for the services that you rendered to them, and you didn't report that in your tax return, right away you get a notice. It works that way. Identity theft. I've actually put down some tips to make sure that you're not a victim. Check your credit report regularly. There are some links in there on how to do it. And also, it is important that you are aware of the steps you need to do if you are actually a victim. As a business owner, we make sure that we have internal policy that help protects our client information. A few tax tips. We have what's so-called above the line items. Above the line items actually reduces your income, and it brings down to the result would be your adjusted gross income. We have There's also a deduction which we call that goes through or flows through to your itemized deduction. Normally, itemized deduction normally happens if you own a house. So a few items for the above the line items are like what I mentioned before, the educator expenses, retirement accounts. I'm currently working with Kyle with a few of our clients that would benefit from retirement accounts. Health insurance, if you are self-employed, it actually goes here. It's beneficial for you to claim it here rather than your Schedule A. Schedule A is subject to limits, and what else? Student loan interest, so on and so forth. Schedule A deductions. I've actually emphasized here in our tax digest, if there's a phase out, if it says no phase out, if it didn't have the no phase out, that means it has a phase out. Okay. Investment interest. You can only claim up to your if you have an investment income. What else? That's basically it. I'm gonna to help you remember what really we do in our practice. I'm gonna touch on a few of the clients that we have that come to our office and why it is important to go to a tax professional versus doing it yourself or using TurboTax. One of the clients that came to our office he is a resident alien. He has a working permit. Brought the wife has Social Security, but the child don't have a Social Security. It doesn't mean you can claim the daughter. All you have to do is really apply for an IT, an individual tax identification number, and there you go, you claim the child. So what happened in his tax returns way back in 2014, he used TurboTax. It looks like his tax return is very simple because he only have a W-2, but because he is a work permit based taxpayer, that makes it a little more complicated. Okay, he did it himself. He's pretty much have done a good job in doing his own personal tax return. But what happened is, so he got excited, he got huge tax refund, but as we review his tax return, he actually had lost a couple of credits. So he didn't claim. What happened when you use this TurboTax? A lot of questions don't actually pop up unless something is some of the questions that actually benefit you is not in there. So unless you're not a professional, you're not a seasoned individual to do this, that can easily be missed. So what happened is he filed a tax return. He didn't claim his child, and the reason that the child don't have a Social Security, but actually it's just a matter of filing an individual tax identification number. So he lost the 4,000 personal exemption for the child, and plus the additional tax credit. So we came back, we did research, can we still amend the tax return? Well, the IRS only allows you to go back 3 years earlier when you filed the tax return, or say he filed March 9, he have until March 9 to actually amend and claim the credit and get more refund. That's one of those that you obviously need a tax professional to do your tax return. A couple of things. Another situation is there was a 1031 exchange. The mother-in-law had rental property, sell to 1031 exchange, and then give that property to a daughter who is now married, live in the property, and now wanted to sell and claim the exclusion. Those are the complications that we handle in the office. Another tax situation is foreign taxpayers. Okay, citizens and U.S. citizens and residents you are actually if you file if you have income, or if you have a okay, maybe I should just end there. So those are the couple of tax situations in Federal Day Office. If you know anybody who have that situation, I would encourage them to call our office, and we'll help them save more money and guide them in the right direction. Again, my name is Arlene of Silas Accountancy, your CPA. Thank you.
Thank you very much. Okay, we have time for a couple of questions. Do you have any questions for Arlene? Yes, sir.
You mentioned deductibility of sales tax.
Sales, and when you purchase a car on a deed of sale.
Okay, what's the criteria for when you need to keep track of the sales tax you're paying? Is there a purchase limit, or?
No, there isn't. It's just.
So anytime you go into, I don't know, CVS?
No, not CVS.
Oh.
In
Any
big purchase, like
Okay.
a car or
What determines a big purchase?
50 grand or 25 grand, 35 grand. Yeah.
Okay.
That's interesting. So I just purchased, pardon me, I just purchased a car, and so I can deduct the sales tax for that vehicle as well as the registration. Is that correct?
That is correct. What normally happens is your tax. So when you purchase a car, your tax professional will actually ask you for deed of sale.
Mm-hmm.
And if you have been doing estimated tax payment for the state, say you were making $3,000 each month.
Mm-hmm.
So it's obviously more beneficial for you to take the income tax deduction rather than using the sales tax that you pay.
Oh, okay,
So
got it.
automatically it takes it, or whichever is higher.
Okay.
Speaking of cars, what determines if something is a company car or a personal car?
Well, it didn't matter. So it's just a matter of where to report it. If it's a personal car, it goes to your Schedule A. If it's a company car, it's deducted, it's being depreciated. So it goes to either to your Schedule C or to your corporation.
So could one car be both?
It can, you just need to determine how much is personal, how much is business.
Whichever saves you the most money.
Well, I mean, I'm always a realtor, the way I look at it. I
Tax
sleep
planning, man.
I won't do it while I'm sleeping, so I'm okay with that too.
One more question.
Being fast. So you said there's changes to the personal liability on people who have a mortgage cancellation. So people who have short sale and foreclosures.
Yeah, there's different tax situations.
Yeah. So
There's
what-
specific calculation for those.
Okay. So whether they pulled out money and did a cash out on or HELOC or
That's
something, what changed? Because I know that personal liability was if you're living in a house and it was purchase money, then it was one way. Did it change that it's across the board now, or is there what did they change?
The calculation is still the same. Before, there's no exemption, but now it's exempted, but there's still a calculation determining what is taxable and what's not taxable. And if it's not done properly, right away you get a notice, because the franchise tax board are actually very aggressive in this kind of issues. And our office actually would extend to put a note to the tax return, make sure that the taxing authority understand what happened in the transaction, determining that it's really not taxable. It's easier doing that way, be more detailed rather than getting notices.
Okay, thank you very much, Arlene. If you aren't convinced that you need Arlene as your tax professional, you definitely should be. Okay, thanks so much for that presentation. Okay, so we come to the most important part of